What happens when the Federal Reserve cuts interest rates? Have you ever heard the news that the Federal Reserve has cut interest rates but wondered what that actually means for your wallet? Whether you're paying off a loan or saving for a rainy day, understanding how interest rate cuts impact your financial life could be the key to making smarter money moves. In today's video, we'll break down exactly what happens when the Fed cuts rates by 0.5 percentage point and how it can benefit or hurt you. 1. Introduction to interest rates. Let's start by understanding what an interest rate cut means. When the Federal Reserve reduces interest rates by 0.5% or half point, borrowing is cheaper. This applies to loans, mortgages, and even credit cards. But how does this change the economy and affect you personally? 2. Lower loan interest rates for borrowers. This is good news. You'll see your monthly payments decrease if you have a variable rate loan, like a home equity line or credit card. You could also refinance fixed loans, like a mortgage, and save money in the long term. 3. Refinancing opportunities. Lower interest rates make refinancing more attractive. Let's say you locked in a mortgage or student loan at a higher rate. Now might be the perfect time to reduce your interest, slashing monthly payments and overall debt. 4. Cheaper business loans and economic growth. Businesses can also take advantage of these lower rates. They borrow at cheaper rates, meaning they can expand, invest, or hire more employees. This creates a ripple effect of job creation, wage growth, and even more economic spending, benefiting consumers. 5. The downside for savers. There's a downside for savers. Banks typically reduce interest rates on savings accounts, meaning you earn less on your deposits. It's a trade-off, but one you should be aware of. In a nutshell, lower interest rates mean more affordable loans and economic growth, but at the expense of lower savings returns. How will you take advantage of this rate cut? Let us know in the comments, and don't forget to subscribe for more financial tips that help you stay ahead of the game.